And that's what the VTS strategic tail risk strategy is all about. Targeted positions that match the current volatility environment. In my humble opinion, buy and hold investing was always dead, but especially these days with bonds having almost no chance to provide investors with any tail risk protection, tactical investing is the only choice left. Welcome back, everybody, to Volatility Trading Strategies. So I hate to be the bearer of bad news, but at some point, whether that's in the next 6 months or maybe not for another 6 years, but at some point there's going to be an extended recession. And not to be too doom and gloom here, but given the recklessness of the government and the Fed, the next financial crisis could be a bad one. Now, I'm not saying this to scare anybody, but the reality is investors definitely need a plan for how they're going to invest during the next crisis before it actually happens. Scrambling around for a makeshift plan while it's currently happening is not going to be good enough. So let me share with you one of several ways that I'll be ready when it finally happens and break down the VTS strategic tail risk strategy. It's a tactical strategy that during stable market periods is allocated to stocks and real estate, but then has signals to move to full long volatility during times of elevated risk and try to capitalize on the next financial crisis. So if you want to see the full strategy in action with all of those live trades, make sure you claim your free trial to VTS in the description down below or also on my website. And if you've already done the free trial at some point since I launched VTS all the way back in January 2012, go ahead and take the trial again. I'm always striving to make improvements, and you're welcome to check out what we're doing lately. So let's talk about the strategic tail risk strategy. So let's get an idea of where this strategy fits into the overall portfolio. I allocate 60% of my capital to tactical rotation strategies, which I call VTS, and then about 40% to multiple option strategies, which I call VTS Options. And inside that 60% VTS allocation is currently 4 strategies with equal weighting. Now, these do occasionally change as the markets evolve over time, but currently it's these 4, and the strategic tail risk strategy has a 25% allocation. It's a systematic, rules-based strategy that only allocates capital to the positions with the highest probability of success given the current volatility environment. And all of the signals are coming directly from my Volatility Barometer. This is my own design of a comprehensive volatility index that's far more robust than anything else out there, because it's a combination of over a dozen key volatility metrics from different areas. Of course, any single metric by itself could give false readings, but taken as a whole, this dramatically reduces bad signals. Definitely make sure you check out the full video here giving examples of how the Volatility Barometer works, but here's how it applies specifically to the strategic tail risk strategy. This is the Volatility Barometer since inception in 2011. Now, it's a little messy to look at on a longer term chart, so I typically show it over 1 to 2 year periods. This chart here is a 2-year look at the barometer reading, and depending on the current Volatility Barometer level, we allocate to only the best asset class to match the current volatility environment. So the main growth engine of the strategy is the S&P 500, and we'll be holding the S&P anytime the barometer is 55% or below. That represents market stability, and long term, this is where the stock market has its best performance. Now, depending on the investor's risk tolerance, that S&P position is either the 1x ETF called SPY, or if they have higher risk tolerance, they can use the 2x ETF called SSO. Now, I never recommend leverage higher than 2x. But when that volatility barometer is 55% or below, stocks are stable enough to take on a little more aggressive positions. So anything in that range will be holding either the SSO for the leveraged version or the standard SPY for the unleveraged version. The timing of all the signals is identical, you just choose the ETF that matches your risk tolerance. This chart here is showing only those 2x leveraged SSO positions within the strategy. And we can see that those occur on about 65% of trading days. Now, it has been an extended bull market, so naturally the volatility barometer will be spending a decent amount of time below that 55% level. But the strategy is designed so that when that's no longer the case, and we are seeing trouble and maybe in an extended recession, these equity positions won't be signaled very often, if at all. Members of the VTS community will see the trade dials for all the strategies in every daily email. And this is what it looks like for the strategy when holding SSO. On days when we do have to change position, we just exit the current one and then we open the new one. It couldn't be easier. Now, the second layer happens between 55 and 80% on the volatility barometer. In this range, volatility isn't elevated to the point of actually shorting the market just yet, but it is a higher risk area and we definitely can't be taking on aggressive positions anymore. So in this range, the strategy will be holding the real estate ETF called IYR. Now, I'll do a video later on showing you the performance of several other asset classes as well in that range. Bonds, gold, commodities, utilities, the US dollar. There's plenty of replacements out there depending on market conditions. That's one of the big advantages to tactical investing. But currently within the strategy, we use this IYR real estate ETF, and that flags on roughly 25% of trading days. This number will increase the rockier things get for the overall stock market. Again, there's an easy-to-read trade dial, and switching positions from IYR to something else just takes a minute or two. So now we can highlight what makes this a tail risk strategy. And that's because anytime the volatility barometer is over 80%, we'll be holding a long volatility ETF. Now there's a few choices here. I'm sure you've heard of the VXX or the 1.5 times leveraged UVXY, and even the new UVIX, which is a 2 times leveraged product. But for our purposes, we'll actually be using the VIXM. Now really quickly here, volatility ETPs derive their price entirely based on the changing values of the VIX futures that they hold. Those other products I mentioned, VXX, UVXY, UVIX, they all use the front 2-month VIX futures for their pricing. The VIXM though, the product that I prefer to use, derives its value based on the 4th to 7th month VIX futures. And since that part of the VIX futures curve tends to be flatter and moves slower, it means the VIXM also isn't nearly as volatile as the other ETFs mentioned. This is great for us because it means when the time is right, we can take those long volatility positions when the market is weak, but we're less vulnerable to the big price swings of some of those other ETFs. This is showing VIXM during the financial crisis, and we can see that it more than doubled, so there's plenty of opportunity here. Remember, the S&P 500 was down 56% in the same time period, so having the ability to take some long volatility positions during a crisis could make a really big difference to an investor's portfolio long term. How good would that feel when everybody else is out there panicking? Your portfolio has found some stability. Now on this 2-year chart, we didn't get over 80% very often, and that's by design. We don't want to be going long volatility when the market is just in a smaller correction. These positions are only for a true crisis. On the volatility barometer chart going back to 2011, we can see a few more occurrences of trades. The European debt crisis, a little bit in 2015, February Volpocalypse event, Q4 2018 crash, the pandemic in 2020, of course, but we're really just trying to catch a trend during the most extreme periods. Here's an overlay showing just when those long volatility VIXM positions flagged, and it's only happening on roughly 5% of trading days. In bull markets, it's just a few positions here and there, and again, that's by design. But when the government and the Fed finally run this economy into the ground, and it's time to pay the price for all of this reckless policy, that's when tail risk is really going to be beneficial. When they do flag, it's just a quick change of position out of the IYR and into the VIXM. Now, as far as downside risk in the strategy, since we are trading leveraged S&P 500 plus long volatility, there will naturally be some drawdowns. In my personal opinion, though, the reward is well worth the risk. And that's especially true when compared to just buy and hold on the underlying SSO. Those drawdowns are substantially worse, as you can see. So the benefits of tactical investing and having the freedom to move in and out of only the best positions at the time is pretty clear. And that's what the VTS strategic tail risk strategy is all about. Targeted positions that match the current volatility environment. In my humble opinion, buy and hold investing was always dead, but especially these days with bonds having almost no chance to provide investors with any tail risk protection, tactical investing is the only choice left. I've got a full suite of strategies that help me navigate these difficult markets. It's not about perfection. I have my rough patches as well, just like any other successful investor, but only allocating capital to the high probability trades based on the current environment has served me very well for over a decade. So if you want to see the strategy in action, make sure you claim your free trial in the description below or again on my website. I'm very confident I can help you achieve your long-term investing goals. Thanks for watching. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.